one thing you want to be cognizant of is the fact that you want to look at price from a larger order flow perspective. This is a 4-hour chart, right? Let me just zoom in a little bit. Let's go on a daily for a minute. Where's the daily chart at? There it is. I understand that price broke out. You had a breakout, right? Price broke out, pulled back, and continued. This is from a larger order flow perspective. We got a zone. I'll explain to you in a second why this is a zone. So you want to be trading from supply and demand. These are zones because we could expect price to react off of these levels. This is a demand zone. Price taps into it and then reverse. This right here is a gap known as imbalance or inefficiency. Price needs to come back and fill in this gap right here. See that? This gap. If there's wicks, that's not inefficient. This right here is not an inefficiency. It's not an inefficient price action. Price needs to come close positions, mitigate positions before reversing. And we'll talk more about that. But for right now, let's look at price from a larger order flow perspective. We have a low, and then we have a high. Peak formations high, doesn't matter. Swing high, swing low, doesn't matter. Most traders are getting caught up inside. You're getting caught up inside of this price action. If you could just wait for the price to tap in to the zone with the day count, doesn't matter. And just take one trade and then scale it up in size. You could be really profitable just by sticking with this trade setup. Day 1, day 2, day 3, expecting a explosive move. You can also see that price breaks out, pulls back into the zone before continuing. Price comes back and taps into this larger zone. If you want to wait for confirmation for a break of structure to show sign of strength, you could do that. Price breaks out, pulls back, and then continue straight up. This was probably a day 3, not sure, but so let's look at this on a smaller time frame. This is a 2-hour time frame, right? You can see that. So price normally will pump up, consolidate, and then pull back down. What's it trying to do is that when price is pumping up, people are buying it up. It's trying to get people to chase the move, right? As it's doing that, these buyers are in profit. People bought, they're in profit, they're buying trend lines, doesn't matter. But they're in profit. When they're in profit, price tend to consolidate. When price tend to consolidate, it's coiling for an explosive move. It's also trying to get more buyers to buy. It's trying to get traders to just buy up here. Higher level longs, doesn't matter. When price does something like that, it's setting them up for a trap. So it's setting them up for a trap, and then price booms, it comes down to the zone. What happens then? These sellers are in profit. It comes back down, consolidates sideways. Consolidate sideways, and then came back out to take out the traders who were in the money. So let me just go back for a little bit. Let's look at the psychology of the market, right? People are buying up here. Who's in the money? Who's in the money? Buyers, right? Who's in the money? Buyers, right? They're in the money. They're in profit right now. If you bought down here, you're in the money right now. Dumb traders who haven't closed their positions, they're still in the money. Price is coiling, consolidates, comes down to take them out. But guess what? Who's in the money? They're in the money. Who's in the money? My spelling is going bad right now. But who's in the money? Sellers are in the money. Who's trapped? They're getting jammed up. Price comes down, consolidates, trapping sellers for an explosive move to the upside. All of this is trap volume down low, but you can see this from a larger order flow perspective. People are getting caught up inside of this price action. Just wait for price to tap into the zone and then buy it up. That's all you gotta do. Just 1 to 2 trade setups. That's all it is. You know what I mean? Same thing with the sell side, but you can see prices pumping it up. These lows act as internal liquidity. All of this is internal liquidity. Price tends to come take out the liquidity before reversing. So this is liquidity. This is also liquidity. These highs are liquidity. These swing highs right here, they're all liquidity, internal liquidity. This is external liquidity. Look at the order flow. This is external liquidity. You know what I mean? We're expecting, when price pulls back down here, we're expecting prices to come back up. Breakout, we broke structure. Bad handwriting, but damn. Let's just, that was horrible. Let's just do that again. We're expecting price to come back up here and take out external liquidity. Break a structure. You broke structure, price pulls back into the zone. Internal liquidity, price broke structure again, pulled back. This is, the market is very fractal. The same way this is happening on a larger time frame, it's the same way it's happening on a lower time frame. We get a breaker structure, price pumps up. Who's in the money? Buyers are in the money. It pulls back. Sellers are in the money now. It takes them out just like that, and then starts to proceed higher. So if you look at this from a larger order flow perspective, we get a breakout, pullback, trend, continuation. Price is always in a box. When we're at the low of the box, we could expect reversals for the move back up. If we're at the high of the box, we could expect price falling, because most breakouts fell. We could expect price to pull back and then continue going upwards.